What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. And today I've got the Bitcoin price chart pulled up here on the screen. We'll peek around at the total altcoin market cap. We'll look over there at the XRP price chart. We've got quite a bit going on in the crypto world. If you're not familiar with what happened yesterday in regards to the Senate and the infrastructure bill and the whole political theater we watched play out there, we'll dive into that just briefly. I'm not going to spend too much time on that, but pretty much we're watching a show happening in front of us. As for the price charts with Bitcoin right now, butting up against some resistance. Yesterday, it did take out the 200-day moving average, so we can see that we have now cleared above the 200-day moving average. It looks like we're back testing it right now. There's still a lot going on in here. We watched what happened when this thing broke above the 100-day moving average. Well, it lost it and then came back up, but there's been a lot of fear, and essentially the whole way up, there's just resistances. I've made videos on this that there's just so many different resistances moving on the way up. Right now, you can see we're actually touching against the 50% retrace level, which also happens to be this area right over here as well, which was a broken support. So we're testing it as a resistance right now. Clearly, we've got to get through that level to keep marching up higher. But of course, as one would expect, greed has returned back to this market. With the fear and greed index all the way back up in here in greed after spending months in complete fear, we're now back up to the upside, back in greed. So will it hold the 200-day moving average? I don't know. I'm not a huge moving average person because we see these things get violated all the time. In the 2018 pop of the Bitcoin bubble, it had a very difficult time reclaiming the 200-day moving average. So the fact that it has in the first place is pretty optimistic. But again, it's not a critical thing for me. And really, while we're in this retraces can be sloppy and range bound and go all over the place. So I'm not too worried about it. The thing I'm more focused on, like I mentioned in yesterday's video, is getting up into these price areas up in here between 51 to 54,000 and seeing what happens with Bitcoin more so up in this area. But we could see why there are problems right in here. We could see the 50% retracement along with a broken support now being a resistance. It's only been one day, not even a full day. So hard to draw anything from that at this point. We did see that Cardano made a nice little pop today above its 100-day moving average, and that the total altcoin market cap is continuing to grind up. Now, normally we're looking at the altcoin market cap over there on TradingView, but if we take a look at it over here on CoinTrader Pro, which is another website that I use and I bring up frequently because that has a lot more historical data, we can see that their calculation for the market cap of the altcoin market is based on what CoinMarketCap has as the total market cap. And based on CoinMarketCap, we can see that the big pullback that we had was nothing more than a backtest of the all-time high right in here. So as we're going back into these retraces, what's going to be happening today, the significance of whatever price action happens for the day, it just doesn't feel like there's really a whole lot of significance in what happens for each particular day for me. Like I mentioned in yesterday's video, the really big moment for this market is going to be getting through these retracement levels. And that shouldn't be a surprise to anybody who has followed this channel for a while. For every swing that we do have, there's kind of the same thing that I go through. We get to a phase where we break out of all of these retracements, we go set new highs, it's exciting, then the market pulls back. As the market pulls back, we look for bottoms to come in. We wait patiently. The market's typically very scared. Then the market goes back into a retrace. I'm usually bullish at bottoms, excited at bottoms. And then as we roll back up into the retracement levels, this is what I do. This is where I start issuing the cautions to say, all right, these are the things that I'm worried about. These are the things that we have to get through. And right now we're in that phase. So right now it comes to the phase of, can we break through these things? Because if there's going to be a really exciting moment in this market where the market turns incredibly euphoric all over again, it typically comes after we get through these levels. So right now, here's something positive. While the fear and greed index does show that we're in greed, I know there's still a lot of fear out there, and I know that there's a lot of participants that have stepped back from the market. I can see that in all different kinds of data, whether it's the viewership of my YouTube channel, viewership of other people's YouTube channels, how many people are still interested in cryptocurrencies, the Google Trends data showing a reduction in search volume for Bitcoin and cryptocurrencies. I also saw some data that was shared by Zero Hedge in regards to the website traffic to news websites, cryptocurrency news websites like Cointelegraph, showing that their website traffic is about 25% or so of what it was back in March and April. So there's still a lot of people who have just kind of taken a step back from the excitement and from this market. And for all those people to really come back and for things to get really exciting, it's to break through those levels and then break through the all-time high. And so for the coming days and the coming weeks, that's going to be the thing that we're really just kind of monitoring. And while a lot of people find it exciting that the 200-day moving average has been cleared, I'm still skeptical of it. If you remember, when we had the death cross take place with the 50-day moving average crossing below the 200-day moving average, how big of a narrative that was, that this is the gloom and doom moment. Now we have a death cross. I wasn't worried about it. It didn't mean anything to me. And it's because I just don't put a ton of weight into moving averages. Everybody has their own strategy. It's not part of mine. If there are moving averages that do have significance in this market to me, it would be the weekly moving averages. That was historically where the bottom came in for Bitcoin back in this previous bubble pop back in 2014 and 15. Same thing for Bitcoin back in 2018 and 19. 200-week moving average ended up being the bottom. And as we can see, we have held support here above this 50-week at this point, which is also what happened back in here, and it also happened right in here. But we can see both times that as the 50-week got a confirmed breakdown, that did send this market into a bear market. Same thing happened in this cycle as well. So I do notice those. I do take those into account that has historically been important. But as for the daily ones, we can see what happened back in here. Just all over the place on these things. So I'm really just bringing it up because I know a lot of people are paying attention to these right now. The things that really have me focused on are going to be the retracement levels. And now, just fair warning, you're probably going to hear me bring that up a lot over the next coming days and coming weeks about those retracement levels, because when we had our previous bubble pop for Bitcoin, that's precisely what happened. It went to a 702 retracement and then went off into a bear market. And so long as we are below them, it has to always be there that's what can happen, right? I don't want to create too much excitement because what has happened now, right? If we look what has happened in the last 2 to 3 weeks, there are a lot of wrong-footed traders out there right now, or really just retail people who have decided to become traders in the last couple of months. Look what has happened to them. They bought the top, they sold the bottom, and now they've gotten left behind. Now they have to make this decision of what is the confirmation that we're going to the upside at this point, right? Where do I have my guarantee that I can buy right now and everything's going to be okay? I had mentioned way back in here that, you know what, I had to make my mind up on what conviction I was going to have, right? I came up with the conviction that we're going to go to the upside, which means I had to be fully long in the market at that time and not fall for the trap of the idea of I'm going to sell now and buy it even lower, right? I've already taken massive losses. It's time to sell it because it's going to go even lower. But now that the prices have all moved up, you start seeing people hooting and hollering that things are exciting and things are wonderful. And so the people who got left behind, or the people who, didn't get their orders filled, they decided to take risk off the table after the prices already fell back down. Now they're watching the prices go up and they don't know what to do, right? The market has not provided a re-entry for anybody who sold in July. The people who sold in June and July have had no opportunity to get back in. So people are hunting for the confirmation that they can get back in right now. And I've always mentioned throughout the history of my channel that I like to buy into fear. I like to buy when the market is utterly terrified. And then whenever the market gets excited and prices have risen higher, I don't touch it. I just sit on my hands. The cryptocurrency market has risen like 65% in the last 3 weeks. And so as all these people who have been left behind are saying, what do I do to get back in? I bought the top, I sold the bottom. Now am I going to buy the top again? I don't know. You're going through the growing pains right now, if that's the situation that you're in. That's part of the growing pains of coming into this market. And most of the growing pains are managing emotions in this market. When everybody is fearful and everybody is screaming that the prices are going to go lower and that we're in a bear market, they're wrong. The market is wrong. The retail group is always wrong. Whenever they put laser eyes and diamond hands on their profile pictures, they're wrong. Whenever they're screaming it's a bear market, they're wrong. And right now, we're at the 50% mark. So it's kind of one of those moments where there's just no action for me to take right here. It's just a wait and see. We're literally at 50% of the all-time high and the pullback, right in the dead middle. So the phase that we're going through right now in this market is retracements. So I'm sure a lot of people who have been around for a long time are at least happy we're at that moment. There's like different parts that kind of stink. There's really two different parts that kind of stink. First of three different parts, I would say. First of all, it's the initial crash. It stinks. It's like, oh my gosh, what is happening? This is horrible. Then there becomes the point of finding the bottom that can be prolonged and painful. And while everybody's depressed, there's a lot of infighting. You go to Twitter, everybody's arguing about every single topic they can possibly find. It does not even crypto related. All the crypto accounts talking about non-crypto stuff, fighting, whether it's social issues or political issues, doesn't matter. Just everybody's in that mindset. And those two phases suck. The initial fall and then going through all that stuff, that horrible toxicity at the bottom. But then we go back into the retrace part. And this is still a hard part to go through because right here, you don't know your answer. You don't know what's going to happen, but you know you're getting near those moments of where the answers can come. And so there's really only one actual kind of fun part that comes in each little cycle move. You have this terrible part, you have this terrible part, and then you have the stressful part of right in here. Then what happens? You have the fun and exciting moment right up in here. And don't pay attention to the prices I have over here. I'm just kind of showing what a cycle does. But you have terrible, terrible, stressful. Then finally, once it gets through the levels, excitement. And the excitement phase is only right in here. Then what do? We start it over again. We start terrible, terrible, and then we repeat it over and over again. So in each cycle, what I mentioned is when we were way up in here and we were sitting in that extreme greed for so long, like back in here, I was saying, this isn't normal. This isn't how the market usually is. And it's coming to understand what happens in each one of these waves and the psychology of the market and how the participants behave in each time. They're terrified, they're toxic, they're worried, they're euphoric. Back to it again. Terrified, toxic, worried, euphoric. Right now, we're going into the worried phase. And for me, with the way my mind works, the more and more up we go and the closer we get, the more worried I get. Down here, no problems. Getting back to retracements, oh boy, here we go. What's going to happen? And I just try to share this with you because a lot of people don't think about those types of things. So, like when we had the top of the Bitcoin bubble back in 2017 and 2018, you can see that's how it happened. ABC correction back to the 702. We can look at even these moves as we grinded our way back up and see how we have, this big, huge fall. What happens? It comes back up into retracement levels up in here and then continues to finish off its move. We can also see that over here on this move as well. It comes back up into retracement levels and then continues its fall. So I'm not saying that's what's going to happen here. I've pretty much presented all the cases on why I don't think that's what's going to happen here. But what we see historically is that that's how these things can work out. And that when we look at things like the XRP price chart right in here and we watch what happened for this big pop that happened back in April, we can see that the retracement level, right, we had an initial crash, a retrace back into the retrace levels, which led to further consolidation back to the retrace levels again at the 702. And then it was the big blast out of there that ended up happening. And that mark happened right in here, right when it got through that 702 retracement level, that it really just kept going. But notice that the euphoria moment was only right in here. There was no euphoria during this whole time period in here. There was euphoria in here, but the euphoric moment of a cycle is very short-lived, and it's only once we get through the retracement levels and we get into the newer highs, then the thing repeats all over again. Back into fear, then neutral, then back to greed again. But I want there to be context for why I do this and why we're going to be talking about this, and it's because my emotions are not in sync with what the rest of the retail trading group is. My emotions are on a different time period than what most retail traders are, and that I'm optimistic down in here, and then I become fearful the higher that we go. And so for me, down in here, this is definitely disappointment. But for in here, this is where I'm excited and bullish, still excited and bullish, and then there becomes this time period right in here where my fear kicks in. So my fear is not way down in here with most of the herd. My fear is always in this area right in here. Then I as well have the excitement phase right in there. And then I also have caution, worry, and fear again, while most of the herd is laser eyes. But the difference is, while I'm all bullish down in here, most of the retail group is very scared. Then as we get right here, this is where the retail group becomes incredibly excited and bullish. But that's not what I am. I'm exact opposite. So it's almost like lose-lose on my channel, right? While we're down in here, I'm optimistic, I'm excited, while most of the retail herd is scared. And then up in here, I become nervous, I become worried, and that's where the retail group becomes excited. So I'm the polar opposite. So I kind of am always battling the battle. There's only one time in the cycle where me and the rest of the herd are on the same page, and that's once we get through there and we're excited. I'm excited about that. The herd's excited about that. And that's really the only time we ever get on the same page. Otherwise, I'm pretty much opposite of what the major sentiment is in the market. The only time we're ever on the same page together is in here. Otherwise, while they're bullish in here, I'm nervous. And then while they're bearish in here, I'm bullish. But when they're bullish here, I am also bullish here. So I hope that kind of explains it all. So right now at this time period, as you can see, hopefully from my silly, weird explanations that I've done in here, these are the time periods where I'm on edge, which is the exact opposite of what the retail sentiment is at this time. And, it's very normal for a lot of people to be, counter of whatever retail is. So, like, that's a very legit trading strategy that people will use. They'll intentionally be the opposite of whatever the herd is. But the reality is the herd kind of moves together at the same pace throughout every single one of the cycles or every single one of the waves that happen, is that they're all very greedy at the top of the wave. They're all very scared at the bottom of the wave. And the reality is, what do we all know in life? Buy low, sell high, right? But the herd doesn't do that. The herd buys high and the herd sells low. So it's not necessarily that you're opposite of what the herd is. It's just that the herd is doing the opposite of what they should be doing. And to really just break away from the cycle of, what happens and to not be on the same page as retail investors, it's just coming down to this and understanding that markets are not just going to keep going like that. They're going to move like this. They're going to move in waves. They always have in this market, unless some crazy thing happens that suddenly changes everything and it's totally different. I can assume that, hey, I think it's just going to keep doing what it's always done. And if we're going to continue moving to the downside, there's going to be retraces back to the upside. And understanding that if it's going to turn over on itself, it's usually going to do it from a retrace level as it pulls back up. It's going to draw back in people with hope and optimism and then do it over a second time. Alternatively, if it gets through these price levels, then it becomes an exciting moment, because when we're going upwards like this, that's what we're watching for. We're watching to see if it's going to break through the retracement levels. If it gets through the retracement levels, it makes it very optimistic that we're not turning over to do another wave to the downside, but that will continue moving to the upside. And once your emotions are kind of all in this understanding of how waves and structures work, you really get off the same page as the whole retail group. And that the whole retail group will buy up in here thinking that it's never going to stop and it's just going to keep going up, and that there is no such thing as waves because this time is different. And that's the same mindset that happens at bottoms as well. They sell out of here because their mindset is that there is going to be no retrace. This time is different. It's just going to go in a straight line to the downside. But once you recognize that everything moves in waves, these Fibonacci retracements have a tendency to be very good at telling a story in the market. Your emotions will kind of shift to a different phase. And so my emotions are always, I'm not fearful, I'm not worried down in here because I'm expecting at worst case scenario that we have some type of a retrace. But the real worry comes in right in here at the retrace. Does the market turn over or does the market break through and we have an exciting moment once again? So as we're in here right now with Bitcoin, just understand that's what's going on in my head right now. In waves, when we pull back up, which my expectation, my hope, and my optimism is we are going to set a new high, but it's that my worry has never been that this market is just going to go down in a straight line. But that if it does go back into retraces, we all know these levels matter. Because I just showed you the top of the Bitcoin bull cycle in 2017, and I showed you two different waves that took place, two major corrections that took place in Bitcoin back in 2017, where both times that mattered, both right in here and right in here before another wave came. But I've also showed you examples of how when it breaks through that level, that's where the real excitement comes in the market. So as we're coming up to this moment, my fear was not down in here. My fear happens here in the retracement. But I've built a lot of cases on this channel for why I think the market is going to break higher. And we can even see that right in here, it's most likely to me that we've already had that. We've already had that big ABC because that's precisely what happened right in here. We fell, we retraced to the 702, and we went on down and already did the big C leg, and we're now in recovery mode in this market. But we don't get the quote confirmations of it for me until we get beyond retracement levels. But for me, it's never about, and this is just me personally, right? So don't take this as like I'm telling you what to do. For me personally, I don't wait for those confirmations, right? Because what happens in this situation is you miss so much of the ride up, right? If you have to wait for the 702 to get broken through and you have to wait for this market to go all the way back to $54,000 before you can finally buy it, you missed 84% of the rise up, right? Nearly doubling the entire portfolio if you have to wait that long, right? If you buy the top, you sell the bottom, and then you're not willing to get back in until it breaks through that level, look how much of it you miss. So, what professionals will do in these circumstances is they'll go ahead and they'll buy into the bottoms, they'll let it ride back up to the top, they'll sell this area right here, and then place a stop loss up in here. So they may miss this much right in here, but they didn't miss all of that in there. But that's for another time. That's for like true trading strategy. And that's not what I teach on this channel because the reality is, even the most experienced day traders tend to lose. But all right, we'll move on from that. I just want you guys to know where my mindset is going into these time periods that we're in right now for Bitcoin and for the cryptocurrency market. I'm still optimistic we're going to break through all these things, but in the end, the market makes the decision. And I want to show you the things that have happened in the past. And this is where the real worry should be. But I know what happens is that retail investors become incredibly optimistic right there. So anywho, I said at the beginning of the video, we had touched topics on this and we touched topics on it very briefly, and I will. The Senate just rejected the compromise crypto tax amendment to the infrastructure bill. So essentially, we just watched an incredible amount of theater happen over there in the Senate. And I'm very skeptical. I actually had the belief that there was a really good chance something like this would happen. But we can kind of go through how all this stuff just played out in this infrastructure bill with crypto. What happened, right? First, terrible law getting written into the bill, right? Then you get a couple of people coming out saying, wait a minute, we have to amend this. Here's the amendment that we propose. Instead of going through the standard procedure of where everybody votes on the amendment, they say, nope, wait, we're not going to do that. We need to have it to where it has to be unanimous, right? We're going to push this thing through really fast. It needs to be unanimous. First of all, I take a step back from that and I say to myself, okay, what would have happened if we did actually have a vote on the amendment like we should have? We should have had an actual real vote on it. What would have happened politically? What type of political damage would occur to a lot of these senators who would vote against it? Their names would go down in the history books. Everybody in crypto would know who they are. We know that they were voting to crush crypto, right? But at the same time, there's some people, some senators, which we all know, not whether their name, you have to assume pretty much all of them, are getting their pockets lined by lobbyists and industries, right? So no matter what, they couldn't make that vote. Whether it was right thing to do, the wrong thing to do, for which way they wanted to vote, they're influenced and paid by companies to vote specific ways. So it pretty much came to this point where probably these senators just couldn't do this vote. One, they would upset their lobbyists, they would upset the people that are paying them, or two, they would upset the public. It was a lose-lose. So what did they do? They go to the unanimous consent route and say, we have to have it so that everybody has to agree. And I started thinking to myself, this smells fishy, man. It smells like they're going to take some dude who is not going to be running for re-election. Political damage doesn't matter to him. And they're just going to have him be the one solo guy to reject it. And sure enough, they did. Senator Shelby from Alabama is the one person who rejects the unanimous bill, hiding behind the guise of needing more military spending to protect the American people. Right? How perfect is that? No senators take the political backlash. They don't upset any of their lobbyist groups. And the one guy who happens to be retiring at the end of his term, isn't running for re-election, doesn't even care what happens to his political narrative, can reject it in the name of protecting America. So I think we all just got played with this thing. I really do. And then this morning, the Senate approves the entire infrastructure bill with a vote of 69 to 30, with all Democrats voting in favor of the bill and 19 Republicans voting in favor of the bill. But like I mentioned, I'm not going to spend too much more time on this. It'll go through the House. We'll watch all the theater happen all over again. And whatever is the end result, right? That's one of those things that are just completely out of my control. And clearly, these politicians can play all their games that they want where they control the end result anyway. It's truly sad. But I had posted this over here on Twitter yesterday, too, that this is just kind of the stuff we have to deal with in here. Since May, we've enjoyed the following fear, uncertainty, and doubt narratives. We've had Elon Musk, we've had the China ban, we've had the Tether scare, we've had the grayscale Bitcoin unlocking. Now we've had U.S. government regulatory unclarity with them trying to crush innovation in the United States. And none of that happened up at higher prices, right? It all happens during time periods of suppressed pricing in the market. And this is just, the way the game is played, man. So that's out of my control, and it's not something I'm going to worry about. The thing I'll just spend my time worrying about is those retracement levels. So, all right, guys, I'm going to wrap this thing up. I hope you're having a good day. If you'd like, you can check out my website over here. This is bcbacker.com. This is my course where I deep dive into the previous Bitcoin bull runs and the different altcoin market cycles to tie them all together to show how the cryptocurrency market has worked in the past. I teach a lot of stuff in here, including those Fibonacci retracements. I teach the tools and indicators and how to set up your own charts within TradingView and CoinTrader Pro. I talk about my personal exit plans and talk about mathematics and percentages in here. There's a ton of content over here in this course, and I did include a market update recently on July 31st. So you could check all of this out over here on bcbacker.com. You could follow me over here on Twitter at bcbacker, and I want to thank you guys so much for watching my channel. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.